All right, let's dive in. Today, we're unpacking a really fascinating story from the heart of Europe, and it's all about Hungary's crypto paradox. See, on one hand, you've got all the groundwork laid for a nation that's ready to jump into crypto in a big way. But on the other, you have some pretty significant roadblocks. So the big question we're asking is this: is Hungary a European crypto leader just waiting for its moment? And this is really the core of that paradox. It's like all the puzzle pieces are right there on the table, but having the pieces and putting them together are two very different things. Can Hungary actually solve the puzzle of mass adoption? That's what we're going to unpack. So, first things first, let's look at the foundation. What is Hungary getting right? Well, the country has been quietly building this digital bridge for its people, and a surprising amount of it is actually physical. Yeah, you heard me right. Physical. We always think of crypto as this invisible digital thing, right? But one of Hungary's biggest advantages is something you can literally walk up to and touch, which makes this whole new world so much more accessible. What I'm talking about are Bitcoin ATMs. Hungary has a pretty dense network of them, especially in the capital, Budapest. And these machines are so important because they act as this super simple on-ramp. Anyone can walk up with cash, their forints, and convert it directly into crypto. It just completely lowers that barrier to entry. And they're not just making it easy for people, they're making it easy for businesses too. Merchants can actually accept crypto without the usual headaches. So a customer pays in crypto, a service instantly converts that into Hungarian forint, and the business gets the exact amount they charged. All the risk from those wild price swings, it's just gone for them.
So what's fueling all this? It's really a mix of things. You've got this general curiosity about different ways of doing finance, especially with the younger, tech-savvy crowd. Then you add in trading platforms that actually support the local currency, plus those super convenient ATMs we just talked about, and you have a really solid foundation for growth.
So you see, you really have two sides of the same coin here. On one side, you've got this incredible promise, built on real physical infrastructure and genuine interest from the public. But on the other side, you've got the classic crypto problems, those crazy price swings, and frankly, a lot of people just don't understand it yet. So let's take a closer look at those hurdles. What exactly is stopping crypto from becoming a mainstream thing in Hungary? Well, the number one barrier is the one thing crypto is famous for, or maybe infamous for: volatility. I mean, those unpredictable, dramatic price swings make it really, really hard for the average person or business to treat it like stable, everyday money. And this quote just nails the fallout from that. All that volatility reinforces this idea that crypto is basically just a high-risk gamble, not a reliable currency you can use to, buy groceries. And in this space, perception is pretty much reality. If you break it down, it looks something like this. Volatility is the biggest piece of the pie. No surprise there. It's half the problem. But look at that next slice, a lack of education. A huge part of the issue is that people just don't get the technology itself. Like what a blockchain even is. Without that basic knowledge, building trust is a massive uphill battle. Okay, so if volatility and education are the big problems, what are the solutions? This brings us to the path forward. It's all about building confidence and bringing some much-needed clarity to the market. It's the key question, isn't it? How does Hungary take this really promising foundation and actually build it into something that everybody uses? Well, a huge piece of the answer seems to be regulation. Now, not the kind that stifles innovation, but the kind that creates clear rules of the road for everyone. And a major step towards that stability and trust is coming, in the form of unified regulation. And that framework has a name: MiCA, which stands for Markets in Crypto Assets. This thing is a landmark piece of legislation from the EU, and it's designed to do three simple things: standardize the rules, protect investors, and ultimately build trust. For Hungary and all the other EU member states, this is going to be a real game changer. When you boil it all down, mass adoption really seems to hinge on these three keys. First, you need education. You have to demystify all this tech. Second, stability. You've got to tame that volatility. And third, you need trust, which is built on a foundation of clear rules, like MiCA and secure services. So putting all these pieces together, let's look to the future. With this unique mix of existing infrastructure and these big regulations on the way, could Hungary actually be poised to emerge as a real regional leader in crypto? This table really sums up the whole journey. You can see the shift from its current state to its potential future. Infrastructure could go from just strong to being fully integrated into daily life. Adoption could go from being a niche, youth-driven thing to being totally mainstream. And maybe most important of all, the perception could shift from speculative asset to reliable digital currency, all under that clear regulatory umbrella. At the end of the day, Hungary is a perfect little microcosm. It's a national case study in that delicate balancing act. How do you push innovation forward while also creating the stability and trust that people need to actually get on board?
And that leaves us with one final big thought. As Hungary navigates all these challenges and opportunities, you can be sure the world is watching. If they succeed in solving this puzzle, could Hungary become the blueprint for how other emerging economies do the same? I guess only time will tell.